During the business strategy game, I used several different successful strategies from week to week. During the majority of the evaluation, I only manufactured my footwear products in North America and Asia. The majority of my footwear products were branded production. The first few weeks, I had unsuccessfully attempted to gain a portion of the market share in the private label segment of the global footwear industry. After reviewing the competitive efforts for each of the first few weeks, I decided to lower my selling price and begin to chip away at the market share of the private label segment week by week. I noticed several of my peers had neglected any opportunity to participate in the private label segment, so competition was relatively weak. However, as the simulation continued, more and more competitors appeared in the private label production, driving my selling price lower and lower every week in order to remain competitive and sustain my market share. Eventually, my private label profit margin became so small that I decided it would be best for my company to focus all its efforts on branded production. If my company had several other manufacturing centers in less expensive regions, I may have been capable of continuing my private label production at a substantial profit margin despite the increased competition. Overall, my company achieved several of my goals in the business strategy game. I maintained an earnings per share ratio above the projected investor expectation every week after year 13. I believe this is because of my ability to realize when to participate and not participate in the private label segment. I distributed my products to various regions based upon geographic distance to minimize the shipping costs of my products. For instance, a majority of the products I produced in North America were also distributed and sold in North America. I also noticed the substantial effect free shipping had on my earnings per share. Therefore, I never offered free shipping to any online customers or retailers. When my company had the majority of the market share in the private label segment, I achieved outstanding yearly reports in earnings per share and stock price. I believe I fell short in accomplishing a quality return on equity ratio, as I only exceeded investor expectations during 2 of the 8 years. I attribute this shortcoming to spending company resources above the industry average in order to create a higher quality product and establish more retailing and internet brand reputation through advertising, retailer support, and celebrity endorsements. In comparison with my peers from the same industry, my strategy proved to be very successful as I consistently remained at the top of the leaderboards throughout the duration of the business strategy game. I believe each company had their own strengths and weaknesses, but the key to being successful in the business strategy game is to minimize the effects of the company's respective weakness. In the future, I would advise the company to continue monitoring the selling price and how it affects market share and potential product distribution. I believe it is important to concentrate the company's product distribution closely to the region in which it was produced. Eventually, assuming the demand for the company's footwear continues to increase, I would attempt to establish manufacturing centers in each of the 4 geographic regions to help minimize these shipping expenses. With manufacturing centers in each of the 4 geographic regions, I believe it would be appropriate for the company to consider re-entering the private label segment. If the private label segment continued to remain competitive, the private label footwear would likely need to be produced in the least expensive region to help maximize the profit margin. Overall, I thoroughly enjoyed the business strategy game simulation and feel that I have learned a great amount regarding business in the global setting.